Hey, what's up, everybody? It is Wednesday, December 8th. Market is, there's not a lot to talk about. I've covered the major points. Last week, leading up to the latter part of last week, we had a market correction, and it was based on the Omicron virus news. And it was based on comments by Powell and other FOMC members who were talking in like a hawkish tone. And I said, first of all, you gotta disregard, you have to ignore anything having to do with monetary policy when it affects the market in a negative way. As long as we are in a positive fiscal environment, and I talk about this ad nauseum every single day now, and actually the whole scenario is getting kind of a little bit boring. Like, maybe you're bored of hearing me talk about this, but boring is good. You just sit back and enjoy the ride. There's nothing here in the monetary environment, and when I say monetary, it's not monetary policy, it's fiscal, that is going to cause, a big or a sustained market downturn. So it's like every day, and when you have these pullbacks that are driven by, well, the virus is real and the virus is something, and I'm not going to try to downplay that because, we don't know. All right, like I said in my last couple of videos, it looks like this Omicron variant is less lethal than the original COVID-19, but COVID-19 is still happening too. But vaccination rates are going up and stuff like that. So, and right now there's no threat of any new lockdowns or anything like that. So, I'm kind of discounting the virus situation for now, but that is something that could return again as a real threat. But speaking purely from the standpoint of policy, that's fiscal, and the economy, we're in a sweet spot right now. And I keep repeating over and over that when you have these pullbacks based on, something an FOMC member says, something Powell says, it's just nonsense. It is offering you on a silver platter an opportunity to add to your stock portfolio. If you want to be a short-term trader, those are dips that you definitely want to buy. And I keep giving you the numbers every day. The fiscal flows are very significant. The 10-day average of daily flows, about 29.6 billion. That's right up around 600 billion a month. And like I've been saying, we're not going to see any significant reduction in that. When the final child tax credit payment goes out on December 15th, okay, we're going to lose that, all right? Unless, Congress decides to extend it. There's no talk about that right now. But we'll lose that, and that'll probably bring the monthly flows down to around 550 billion. That is still a very good flow. Very good. I've been saying that pre-pandemic, which was the whole Trump period, we were running at 420 billion average a month. And look at what the market did. So, we're not even going to get back down to that 420 billion. We're going to stay up around 550 billion. I'd be surprised if we dip below that. There's also the Build Back Better plan, which still has not been passed yet. But if that gets passed, that's going to add to it. You have the Social Security increase that comes in January. That's going to add about another, and by my calculations, probably another 60 billion. That's annually, though. I could be wrong on that. But it would offset a good amount of the child tax credit. So, I keep talking about this same stuff. And maybe some of you are getting bored. I am concerned. Yesterday I spoke about the situation in Ukraine between U.S. and U.S.-led NATO, intentions there and Russian troop buildup, and that could be a hot spot. And if that goes from a Cold War to a hot war, that's definitely going to scare the markets. I don't know if it's going to have any impact economically. I don't really see that developing into a major economic hit, but it will scare the market. So that is something potentially out there that I think it's worth paying attention to. But other than that, we're in a sweet spot, and we've been for a long time. And everybody who is predicting, collapse and hyperinflation and, panic over a rate hike, or even what's even more nonsensical is panic over taper. I mean, I've explained 100 times what taper is. Redirecting income flows from the government to the Fed. Now it's from the government to the economy. It's literally like sending out checks again to the economy. But the taper is happening very slowly, okay? And the Fed is reducing by $15 billion a month. But every time there's an FOMC person who says, oh, maybe we should speed that up, the market goes crazy and sells off. These are people, it's driven. You could see how, I love this concept. And it was a well followed, almost an academic concept years ago. The efficient market theory, that the market incorporates all known information, and therefore you can't really beat it because it knows everything. And that is, we see how bogus and ridiculous that is, almost on a daily basis. It cracks me up. So like when you see behavior like that, and that's crowd behavior, that's mass behavior, and that is evident every single time there's some pronouncement. And here's the other thing, and I talk about this a lot. There is just this tunnel vision focus on the Fed, as if that is the only, variable that matters. And in reality, it's probably the variable that matters least. But yet, the fact that so many people focus on that, almost the entirety of the market every market focuses on that, it gives you a great opportunity to make money, really. I think those of you who have been listening to what I'm saying and following as I call these moves, you got to see for yourself now that that's the reality. That every time, because of this tunnel vision focus on the Fed and this belief that that is the universal factor, the number one factor, excluding everything else, it sets up these great opportunities. It really does. Anyway, that's the update for today. The fiscal flows are solid. You just got to keep buying the dips. You got to add to positions. Corporate profits are going to be good. The economy is growing. I went out last night. It was my girlfriend's birthday. Took her out. The place was packed. Packed, man. Unbelievable. Really. So that's it. See everybody tomorrow. Bye-bye.